So just quick run through of like how I would approach taking the temperature of the market, as I like to say. The first thing I would do is pull up Reuters. Actually, let me reverse on that because that's not the first thing I do. The first thing I would do is I would look at this risk meter, BabyPips risk meter, just because this is going to be the most fragile one in my opinion. Just because there's a few unknown variables for that don't like give me certainty on how this is impacted. So I see that it gets updated, right, pretty frequently, but it doesn't tell me like why it's saying that we're in risk on versus risk off. So I just kind of use this to put me on the path. So right now the market is saying we're in a 75, 74%. We'll refer to it percent to in percent in a risk on state. So 75% risk on. If I'm looking at gold, right, gold's in heavy risk on state, which means if it's in a risk on, it's going to be going downwards. Um, but that's really the only one that I would look at from this list. I mean, I would look at USD from the list, but I have my DXY for that, so I'm not super concerned about what this is saying here. Just really, really only focused on what it's saying here. So it's saying we're 75% in the risk on. So that's the first thing I would do. All right, then the second thing I would do, I hate that I gotta reshare this screen so many times.
Yeah, I know.
I'm just gonna do share the entire screen, whatever.
Right.
All right, so you guys can see my screen, right?
Yes.
The second thing I would do is, so when you click on this little bookmark here on the right under publish on your trading view, as we look like we're about to get a clean entry though, so let me just log into my Islander really quick. Hold on.
That's how it goes.
Yeah, and as I mentioned right before we got on this call, like I, especially when it comes to decision making levels, I want to trade them one of two ways. Either I want to trade either. So this is decision making level. So I want to trade away from these levels. So this would be price moving away from this level. If we broke this level in this direction, I would want to trade away from it in that direction to this new level. So seeing how this is lining up right now, looks good. But then I go to gold, and gold is not showing me that reverse movement. So now I would want to see gold to break this 15-minute level, and what I'm gonna do is put an alarm at that level so I know when it does break that 15-minute level. Because at the time of that break of this 15-minute level, right, it's like my alarm is gonna go off and I'm not gonna miss anything. I'm not just like the play isn't gonna be like if I don't get to that alarm in that moment, it's not like I'm gonna miss the play, right? Because price will my confirmation, VXT confirmation with a lagging line, getting below this area, it's not gonna break and until like roughly around this candle here, right? Or somewhere around in here. So we'll have time when that alarm does trigger, if it does trigger. Um, but yeah, USDJPY was looking pretty clean, right? But this is why it's important to take the temperature on the market and understand the fundamentals. Okay, so the second thing I would do after I look at the baby pips is I'm gonna look at these news folders on TradingView. So right here, depending on what pair asset you're selected on, these news folders are going to change. You can also go to tradingview.com/news. Found that out just by experiment. I was like, hey, I wonder if this works, and it did. So, um, but then I just kind of want to look at what has the market been saying since it's been open, which that's Sunday. So that's a what 48 hours. So the stuff that says 2 days ago, kind of touch on those and just see what the market was saying. And anytime I say like the market, it's like who is saying that? It's just Forex Live is part of the market. Dow Jones News Wires, Reuters. These are part of the people that report and speak on stocks and policy changes and trade changes and all of these other things that impact the market. So when I say that, that's just for context. So this will be the first one that catches my eye. Not really worried about. I'm not gonna say not worried about it, but this is stuff that happened in the previous week. that price we already reacted to, but it's still stuff that we should know that is on the horizon, like the tariff talks with EU with Trump, right? So that started on Friday, right? And so this was the first one that will get my attention 2 days ago. So this is Sunday, market open, right? You can even check the time, which I love that it does that. So 3:14 um, p.m. on Sunday, um, Trump agreed to extend the EU tariff deadline to July 9th. We've seen this picture before, right? When it comes to Trump shifting those dates, right? But what does that do? Like, it's so crazy because off that one headline alone, just that one, I can understand why the sentiment is currently risk on because of that change. Like, okay, here we go. Now we're getting this break. One sec. Getting this break of gold. So this is good because what I was gonna get to was the price right now, the way it's reacting, it may be following the current sentiment, but it's not following the long-term fundamentals and from my analysis, right? Because the current sentiment, just from like the baby pips reader, and so let me do this. So when I say sentiment, I'm referring to the in the moment sentiment, which we can refer to the in the moment sentiment as how the market is reacting. When I say sentiment, I'm also referring to the long term sentiment, which is driven by the fundamentals, which is how the market is going to respond to you know what I'm saying? So we have the reaction in the short term sentiment, and then we have the response in the long term sentiment driven by fundamentals. First one, short term sentiment, reactionary, driven by technicals. Fundamentals driven by or long term sentiment driven by fundamentals. And then we have our sentiment. And Q has a sentiment. I have a sentiment. You have a sentiment. So when I'm saying sentiment, I'll clarify which I'm referring to, but those are the three types that I will refer to. And so seeing price now, like I can understand the in the moment sentiment, right? Because of the most recent news that we received. And I will not say the most recent news, but what triggered this uncertainty again as we float into the weekend was this Trump release of the tariff talk, right? And then it came out and said that he's going to actually extend their deadline. So in that moment, I don't have any doubt that the market started shifting to risk on, right? So let's just for, I was gonna say a curse word phrase, but I'm not gonna say it. But just for the heck of it, let's go back. So that was 315, I believe that said. So if we go back to USDJPY around that time, let's see how the market started reacting, right? So this is 315 right here. This candle, let's get rid of this. This candle right here is 315. Boom. Oh, 310, excuse me. 315. Boom. Okay. So market and remember this is Sunday. So I've said something about Sundays before, right? It has just a manipulative nature from my analysis. Sundays and Fridays, both very manipulative, right? And the day after Sunday from this previous week was a was a holiday. It was a U.S. holiday, right? So I'm keeping that in mind as well. But anyways, we get price moved down to this decision making level. Price holds up at this 15-minute decision making level, and then we start to get some movement upwards, right? This is Monday, but no, this is London market moving price. This is not the U.S. market moving price. But then we just get stagnant. We just get stagnant. We just get stagnant, and then we sell off, right? And so this is where I first of all love decision making levels. So I can actually touch on those as I'm flowing through the sentiment. But this is why the force field nature of the decision making level is so important because it confirms when the strength of price is stronger than the sentiment. Okay, it confirms when the strength of price is, or let me say, shifting away from whatever the current, or it might be flowing with the current sentiment. But I'm saying that because this news release impacted the dollar in a positive way, right? This like the U.S. markets, other markets would have loved to see that Trump extended the tariff date. Why? Because it gives a little more time, but also it makes in my from my analysis, I feel like investors are like, wow, he's not really serious about not serious, but more of, oh, this is just negotiation, but they're not playing around. So, you know, they're gonna give some time to negotiate, but we still have to kind of, know that they can increase the tariffs or whatever the case may be. And so why I'm saying that is the U.S. investors, when they see that deadline, they're like, okay, risk on. Like let's put our money, let's shift our assets back to riskier assets. Now that the tariffs are calmed down. July 9th is, I don't know when the first date was that he gave. It might have been July 2nd. I don't know why I thought of that date. But and so now we have a week. Oh, it's a week between the time that we thought we were gonna have some big tariff change. It's a week from then. So like those are what the market is looking at to sway from risk on to risk off. Um, and so because we didn't really have like this move here, as we're getting gold to break again, really wasn't much either, because this was at Sunday at 7 p.m. So this is during the Tokyo session, which is not a very volatile session. And then, we get into London, which, I mean, London with no New York following it, right, doesn't seem like it really wanted to break out of anywhere and move. But then we get a fresh session this yesterday, right? Because remember, when the market opens back up in the evening on the same day, it's a fresh trading day, right? So we get this fresh trading day as of 5 p.m., right? So this was the first candle of the Tokyo session on a fresh trading day. We get price to move down to the decision making level, right? Get stagnant, holds it, starts creating higher highs and higher lows, right? And ends up breaking out. And this is just priced, but per our VXT system, right? You see that beautiful breakout, and that would have been the initial entry point. But now we are getting into the response from the news, right? From that change. And then so I didn't see what this was at 2 days ago, but I can make a great assumption that it was somewhere in this risk on state 2 days ago, right? So that's the first two things I'm gonna do. First thing, I'm gonna check that baby pips reader. I'm just gonna see what the market's feeling in this moment, like their sentiment in the moment. I'm gonna check TradingView news to see what I missed over the weekend, and then I'm gonna so while I'm checking TradingView news, I'm also checking to see how was that impacting the sentiment. Like when this came out, I don't know anything, but I could assume that was impacting the sentiment in a risk on way. All right, let's go to the next. Let's go to the next one. Nikki may trade. Nikki may trade range bound amid uncertain. Wait, hold on. What? Nikki may trade? That doesn't even sound right. Because this is a futures, Japanese futures. I thought that was a company, but let's see. Nikki futures are flat. USDJPY compared on Friday Tokyo stock. Investors are focusing on any developments related to U.S. trade policy. President Trump said on Sunday that he would delay tariffs on the European Union until July 9th, giving to his threat for 50% tariffs that were set to go into effect. Oh my gosh. So look at that. So from June 1st to July 9th is what the tariffs got pushed back for the European Union. Like significantly. Like the investors, where it says, listen, investors are focusing on any developments related to U.S. trade policy, right? And so, since investors are focusing on developments related to U.S. trade, and this is related to U.S. trade, and this is a positive thing for mainly the European Union, right? This investors would like to see this. This was probably a good thing for them to see. And so, okay, then we're just confirming again. Risk on. Next candle or next candle. Next news article. Euro rises, dollar recovers as Trump gives more time for EU deal, right? Bullish for risk on currencies, because first of all, euro is a risk on currency, and then Trump gives more time is a positive thing. So that's going to boom shift markets to risk on. Yen weakens amid mild risk on sentiment. Okay. So I just read 3 articles prior to this. I formed my own sentiment saying that this was shifting the market into a risk on, and then just a headline just came out of nowhere, and I didn't know this was here, but then it confirms that, oh, the market was or has been in a risk on state, right? And the yen weakens. Why? Because the yen is a safe haven currency. The yen is going to strengthen during risk off moments. Okay. And then so now that was 2 days ago. Now we're at yesterday. Okay. Asian stocks, euro gain after Trump delay EU tariffs. Japan's Nikkei futures rises for a second day as trade fears ease. Right? Like I'm paying attention to that. Trade fears ease. And I don't want to read the article right now at this time, because I want to actually pull up some charts too. But the trade fears ease is a risk on analysis, right? If the trade fears were overwhelming the market, then that would be a risk off type of headline. And then that's when gold would be doing well, and that's when the dollar would be hurting, and that's when the yen would be doing well, and so on. Forex Live, Asia Pacific, Trump delays. So it's the same stuff they're talking about, right? Japanese yen holds firm as dollar weakens. Boom. Euro jumps, dollar. Boom. So same type of stuff that we were talking about on nearly all of these, right? And then we get closer to today. Yen strengthens after BOJ. BOJ's Governor Uda's remarks. So it's similar to how the Central Federal Reserve has Jerome Powell. The Bank of Japan has Governor, and I don't know how to say his last name, but I know he just got appointed recently. Um, but and so then I'm just literally looking at these articles to take the temperature of the market to form my sentiment, based on the current reactionary sentiment, right? And now we're gonna actually look at some, like, what has happened. And so I'm gonna go through as many articles as I honestly need to feel. And even in the moment, like me and Q always bring up articles when we're on calls or on like in the moment trading, because we'll see it pop up in the corner. Because I don't normally have it like this. It's normally like this, so it's just smaller. Um, and so this is like I'll go through these until I've kind of understood at least all of the headlines. If it's something that intrigues me more, then I'll click on the article and I'll read it. But it'll filter based on whatever asset you're looking at. So I would encourage at least having the DXY and looking at the DXY. But also, if you have like a USD pair in what you trade, US yeah, if you have USD in a pair you trade, that'll work. And then gold of course as well. So um baby pips, TradingView, and then finally, because what TradingView is not going to really show, it's not going to really show this type of stuff, right? It's not really going to go to the more, I don't want to say like war, but that's more, um I don't know how I want to put this, but that more has to do with the market, like just like trade, like that's all like fiscal policy and stuff like that. This more has to do with the global, um peace. Like, you know what I'm like not I mean geotensions. I don't know what I would how I want to say that to you that separates what Reuters does from TradingView because Reuters does have stuff that TradingView does have, but Reuters also has stuff that TradingView is not even going to have on their thing. Sometimes it will, but sometimes it won't, right? So you know, like they have their own space for markets on TradingViews or on Reuters. So then what I would simply do is I would first click on markets and I would just see what like is the main topic of discussion here. It shows the times updated as well here. Um, and I normally don't spend a ton of time on here if it's not something that just catches my eye immediately. Then I just kind of go on to the next thing. But I see Trump media to raise 2.5 billion to fund Bitcoin treasury, like something like that. You're probably like how does Bitcoin apply to this? Well, Bitcoin's like a risky asset. So the fact that the president of the United States' media team is looking to raise money, 2.5 billion to fund that, that would leave me in great speculation for sure the potential rise of Bitcoin, which means the potential rise of cryptocurrency, which means the risk on aspect of the market. So there's a future for that. Now, this headline doesn't mean this is going to happen now, right? But and so if I can be close to sure that there is a future for this, and I can gather all the pieces I need to support the future of the risk on market being prominent, right? I can then take the short term market and I can really look at the areas in which are technically driven and which are influenced by like the current in the moment sentiment, right? And so because if I know where we're going, then I can know, you know, I can potentially know how they're gonna try to manipulate us on the way, or what are they gonna try to, what confirms that we are headed in that direction. There's a few things we can look at. But that's what I would do on this. I really don't see much going on Reuters right now. Wall Street opens higher after a long weekend of Trump's. So like that's another risk on reaction there. And now I'm not gonna get into that. But yeah. So that's what I would do. And then you can sometimes there'll be stuff on here about Trump and Putin, or Zelensky and Putin, and just kind of give you updates on the geopolitical landscape and how things are going. So like this right here, look, Trump says Putin has gone absolutely crazy considering more sanctions on Russia. Okay, so now we were just made aware that Putin is considering more sanctions on Russia, and Trump doesn't like that, which could cause some tensions between Trump and Putin, right? And then you have Ukrainians and Trump, which have a good relationship. So like you think about that, how that geopolitical landscape may fluctuate, it may change from the previous kind of stability we've had from that over the last couple of months. So those are the three things I would like to get into. And then the other thing I want to mention too is my F or let me go Forex Factory. I'm going Forex Factory, man. It's just so much cleaner, so much cleaner. But then I would go to Forex Factory and I would check the news for the rest of the day, and the rest of the week, right? So now I've formed my in the moment sentiment. I didn't form my in the moment sentiment. I've analyzed what the market is saying in the moment based off of baby pips, right? And that is my reactionary sentiment that I'm gaining from the market there. That is also driven by technicals, and when I say technicals, decision making levels can fall into that. Um, even our VXT confirmations can fall into the technical aspect. Um, and fair value gaps, I would say, could fall under that technical aspect. But then fair value gaps, or excuse me, imbalance in price could fall under that technicals as well. But then again, like I could make the argument that that's a fundamental um, signal as well. Just when we think about the nature of what that imbalance in price is saying. But that's not important. But then I'm just gonna look at the market, see what's on for the rest of the day, rest of the week, right? And so we see Monday had that banking holiday. But this is what I want to touch on real quick. Sunday, the Fed Powell spoke, right? And I was curious to see what this was even about because I didn't really look into it in too much detail. So I was just gonna wait for the speech to come out. And then so I went to Google, I typed in federal Jerome Powell speech Sunday, right? And this is what it gave me. So I guess he gave, I don't know how to say that word, but anyways, it was at Princeton University. He gave this speech. I didn't read the speech. I truly just want to know if the speech has anything to do with the market or anything to do with inflationary or deflationary commentary from Jerome Powell. So what did I do? I just took this thing to the wash, ChatGPT, right? I said analyze this article for inflationary, deflationary tone regarding the market. Um, Told them what the speech was, where it was taken, who it was taken by, and then it gave me this, right? Boom, 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 boom. I put it in, but then it tells me this. This is not inflationary or deflationary. Like so, boom. That's really all I cared about. So I'm assuming when I just scanned my eyes through this, it was just some type of like, um, maybe like recognition, like Federal Reserve. They chose Princeton chose Jerome Powell to come speak to them, probably graduation or whatever the case may be, and so that one really didn't have any impact on the market. So as I'm viewing what is going on for the rest of the day, rest of the week, but also considering what did happen, if it's something as big as that, right? Because there is stuff that like speeches come out on the weekend and then it influences the market come market open. But then I see then what I'm going to do is based on the sentiment I understand about what's going on now, the sentiment of how things could unfold with the trade change from June 1st to July 9th, because that, like, I feel like that's going to impact the market in a positive way over the next few weeks, right, as we get closer to July 9th, right? And so now I'm looking at the news, like what do we have on the horizon? So consumer confidence, that's at 7. That is an important folder. You see, it's an orange folder, but that is an important folder. And so, how do you read this folder? It's for financial confidence, a leading indicator of consumer spending, which accounts for a majority of overall economic activity. Okay, and then the other one I want to click on is I want to see, yes, here. Okay, so it says the same thing here. I thought this would say something different, because there's another folder that says it tells us 50%, 50 or higher signals expansion, 50 or lower signals contraction. But we should take these numbers for what they are. The higher, the better, because the higher means the more confidence, the more, yeah, the more confident consumers are about overall economic activity. And man, I'm rambling. I've been going on. I'm sorry. Q, if you want to step in at any moment, I'm just down. I'm down a snowball, And once I go into those rabbit holes, man, I do need a hand to come out sometimes. But a few things that are important to understand about these fundamentals as well is whenever you see stuff like leading or lagging, leading indicators are first of all the data that we see come out is essentially lagging. It's behind because it's the surveys were taken from the previous month. The data is taken from the previous month. Okay, so like we have to remember that because that is why the market reacts and responds. Like there's so many different like pathways I want to take you down with that concept right now, but I'm going to save it for another time. I just want us to remember that all economic indicator, all news folders are behind the current moment because it's all data that had to be gathered for it to be revealed. Okay. And so when that data is gathered and then revealed, similar to this news folder here, right? This data was gathered before April 29th, but revealed on April 29th. But it is a leading indicator, so it tells us what the consumers are saying, are feeling. This is a feeling thing, confidence about the future. Okay. And so that future could be in the next month, 2 months, 6 months, right? But it could be that future could be like when they did this survey, when they were feeling this way on or prior to it. You know what I'm saying? Like follow me when I'm saying that. So from March 26th, which because this came out on the 25th, so from March 26th to April 28th, right? Consumers were giving data, right, based on their confidence, right? So there may be a lot that changed from April 29th when this data came out to today, April 27th. You know what I'm saying? To where now the consumers are like, oh, okay. Eggs are down a little bit. Gas is a little bit better, right? The things that they're paying to, services are cheaper, right? And consumers may be feeling a little bit more confident, less than a month later. Um, and so we have to just keep that in mind when we see leading indicators. It's going to be for the future feelings or the future confidence of in this case consumers. So that's a photo that's on today, 7 a.m. Going to be pretty important. I want to keep my eyes on for that. Then we have a few Fed members speaking. I got my grandpa speaking there. No, I'm just kidding. It's not my grandpa or anything like that. This is something they've already conducted, and so now they're just revealing it to the market. And there it goes. So let's go back to the Richmond Manufacturing Index really quick. Why do we care? Why do we care? Normally it has where traders care, but this is a good one here as well. Let's just read this. Above zero indicates improving conditions. Below zero indicates worsening conditions. Tends to have a muted impact because there are earlier regional indicators related to manufacturing conditions. So they're basically saying that this folder tends to not impact as much because there are other indicators related to manufacturing conditions, like the New York State Manufacturing Index. There's a few others that conduct a manufacturing index as well, but this part right here, just I'm ignoring that. Like I don't even care that Forex Factory is telling me that this tends to have a muted impact, because what does tends to mean? Like how heavily is that leaning on the side of 100% of the time, right? So I would prefer to analyze it myself. But one thing we can know, or we should know, is that zero indicates improving conditions, right? And so the forecast has projected a improvement, right? So we've projected going from a negative 13 to a negative 9, which it's still in poor conditions, but they're improving because they are going towards zero, which if we can get above zero, that's going to confirm improving conditions. But we can also say conditions are improving here because we are going in the right direction. And so if this, not, I'm not even going to get into all that. But yeah, so that's Richmond Manufacturing Index. We have the FOMC meeting minutes, right? Why traders care. It's a detailed record of FOMC's most recent meeting, providing in-depth insights into the economic and financial conditions that influence their vote on where to set interest rates. Okay, I used to not pay too much attention to the FOMC meeting minutes, but I'm starting to understand why it's so important. So let me put. What time is it? All right. By 7 o'clock, I'm gonna conclude all of this. We're gonna talk. We're gonna get into some charting. Q's gonna say a few things. We're gonna go from there. We're gonna go from there. But dang, it doesn't show me. Okay, let's pull it up on Forex Factory. Let's put it up on Forex Factory. Let's go Forex Factory. We're gonna go calendar, search events, and we're gonna go Fed funds rate. All right. So on May 7th, 2025, the Fed did not change their interest rates. Okay, they did not change the interest rates. It's going to mark a 1, 2, 3, or actually 1, 2, 3. It's the third meeting in a row they have not changed their interest rates. And so that's just something I just wanted to say. And so this meeting minutes that releases tomorrow at 11 a.m., coincidentally, right? 11 a.m. Think, oh my gosh, there's so much I can just say, but let me just say something real quick. That meeting releases at 11 a.m. That's after the New York London Open, and it's like an hour. It's like 2 hours, 3 hours before the market closes, right? And so I'm not touching the market at this time because I've just seen so many times the market goes into a manipulative mode when it knows that it's going to close and that we're having like an important folder. Like this is an important folder. So I just want to say that I don't like trading on folders like this because we're too close to market close. I rather wait until market reopens at that 5 o'clock Tokyo. It does open back at 3, but I'm looking to execute at 5 o'clock for Tokyo. But anyways, it says a detailed record of the FOMC's most recent meeting. Okay, this was the FOMC's most recent meeting. Okay, and so it says providing in-depth insights into economic and financial conditions that influenced their vote on where to set the interest rates. So we basically get a detailed insight, like here's some of the data points, and oh, our labor market has been doing really well. But still so much uncertainty lies, with the tariffs. And so that just could be something that Fed Pal says, right? But then he just comes to say, so yeah, that's why we chose to stay with the 4.5 base point interest rate because we didn't feel like the economy has gotten out of hand to where we need to cut the rates. You know what I'm saying? So something like that, and so that is going to come out in the FOMC meeting minutes, which is really important for us to even understand the Moody's credit rating change, right? We could maybe get some insight on that. It can give us more insight on tariffs and trade and investors, how they're feeling about the market. Like it just gives us so much more insight because everybody is looking at this. Everybody's looking at this and paying attention to it. So then we see, traditional labor market stuff on Thursday, PCE on Friday, trade balance as well on Friday, which I know it's a yellow folder, but it's still an important folder to look at regarding our just our balance sheet as an economy. But then we're in the weekend, right? And so we see that this week is pretty much dominated by this event here. So everything leading up to this moment, like I'm going to be going with the current sentiment, right? Of how I'm feeling about how the market looks right now, because this is going to impact a few weeks and to come, and just from my analysis. But so baby pips is the first thing I'm looking at, right? TradingView articles is the second thing I'm looking at, right? I want to take a look at all these TradingView articles, see what the market has been saying. Reuters, I'll take a look at that, see what that's doing. But then I want to know what's on the horizon for news. And honestly, no particular order. No particular order. You have to do this. The quickest thing I do is I do this first just because it's quick. Like I just need to take a look at it and see, okay, we're gonna risk on. But there are times where I go to the calendar first, check the news for the day, for the week, or I go to Reuters first or whatever the case may be. But the point is, having some type of system to form your own analysis form your own sentiment pre-market, like pre-market meaning pre when you are engaging with the market, when you're thinking about taking a trade. So like just a moment ago, right, when I saw USDJPY coming in, and I was like, oh my gosh, looks so good, like I should enter that. Like that would have been a terrible trade for me to take, only because like I had not sat down and did what I just did. And I've done that before where I'm like, oh, looks good, about to come in. And I take it and I take an L. And I'm like, damn, that's because you didn't spend some time like really seeing what the market was talking about. So yeah. Just a few things there. And by few I am sarcastic in saying that because I know that was a mouthful.
All good stuff though. All good stuff though. All good stuff though. A few points I'll make before you get to the charts, Marcus.
Mm-hmm.
One, I think it's Marcus is exploring these news folders, right? I think that for the last 50 minutes, Marcus we have been exploring what these folders mean and the impact they have and the importance that they carry. Um, and I'll say it's on us to explore them, right? And building our own sentiment and not relying on a baby pips resource, a sentiment resource to create our sentiment for us. But a really good example of why it's important to look at Forex Factory, look at the details of these folders, and explore them further. So on Sunday, Fed Chair Powell had a speech. So I'm sitting here a little bit ago as Marcus is going on. Okay, I was like, okay, yes, Fed Chair Powell spoke a couple days ago. What do you talk about? It's an orange folder, but you dive a little bit further, and it was you just expand it instead of just looking at Fed Chair Powell having a speech, and he was just giving a bachelorette address, a ceremony address, a speech.
Mm.
He talks about some good things, of course, but nothing that will necessarily impact the market really in any way. From my analysis, him talking at a graduation at Princeton doesn't give me a lot of feeling that what he's going to be talking about will impact the market. I looked through, I had ChatGPT kind of summarize the transcript. It's just like a typical bachelor address. So I just wanted to make that point. And then the last point that I'll make is, and I said this on Sunday during our Bloom Growth session as well. Why are we doing this, right? And this is my macro minute that I had scheduled for yesterday. Hopefully, I can get things in order here, tech in order on this side. So I want to get that out, even if it's today or tomorrow. But why are the macros important? Why are understanding the macros important? It could seem like a lot of esoteric jargon. And in that sentence, I used fancy words to describe the use of fancy words, right? Esoteric meaning specific, very specific to a certain discipline. So it may seem like through the last 55 minutes that we've been talking about things that may not necessarily pertain to you, that aren't that important, even though markets is telling you that it is important, right? But simply put, and I'll kind of just boil it down to the main points of why we do this. Simply, and as Marcus showed on Sunday, and we'll continue to show today, we analyze the information, we analyze the news, we analyze the sentiment, we analyze the data to get a gauge on what the US dollar is going to do, because us understanding if the US dollar is going to go up or down at any given moment, now, a week down the line, a few months down the line, us tracking this allows us to kind of track it, really forward track it through time. It allows us to make very, very informed decisions on the US dollar involving pairs that we trade. And we talk about risk very, very often. And I like to say risk is on a continuum, right? Of not risky, not zero risk to as risky as you can get. And whenever we're trading, obviously we have an assumption of risk, and we're on somewhere along that continuum. Us understanding the macros, understanding how the macros will impact the dollar and so forth, like I just said, allows us to move on that risk spectrum closer and closer to not as risky, to put it simply. We are taking our position by the handlebars of our position on that risk scale, if that makes sense, which is everybody knows who interacts with this market how important risk management is. And we have found that risk management is something that we have to take ownership over. And we believe that the way we are approaching it allows us to slide as close as we can get to not as risky at any given moment. As consumer confidence just drops above forecast.
And silly me, I literally forgot that's what was coming out. And so I just took a buy. I was already gonna take a buy when we got a candle close. I actually forgot that was coming out at 7. So I took a buy on USDJPY. Going for the 2-to-1 here, and I mean, like what I was looking at here, and I will say, great stuff, Q. That forward thinking, I think, is a big one. Because even the Fed has referred to them approaching it in that way. Um, and so, I mean, if the Fed is forward thinking in their decision making, right, then it would make sense for us to have a similar approach to reduce that risk, right? Um, but yeah, I love this entry. Like, following the fundamentals, like it did come just out on that news folder, which I don't usually do. I'm not opposed to doing it. Like, it's not something I'm going to say like I will never do, which is trade on the news, because I definitely will. Um, but we're moving off of this decision making level. And just to touch on these decision making levels real quick, since we have two of them here, decision making levels, they act as two different things at two different times. At one time, they're force fields. At the other time, they're magnets. And so in this scenario, this decision making level right here, this daily decision making level is currently acting as a magnet. Okay. So let me move this one down, because this one is the force field. This decision making level right here is acting as a force field. Why? Because it's preventing price from going below it, right? So the closer, just remember this, the closer we are to a decision making level, the more that decision making level is a force field. And so, just on the other side of that, the further we are away from a decision making level, I spelled magnets wrong on my live call the other day, or not the other day, but when I did this video, I think I just spelled it wrong again. But anyways, don't worry about my spelling. Um, the further we are away from decision making levels, the more decision making levels act as a magnet. Okay, a magnet. So we're literally trading this is an ideal trading scenario for me. Like, this is exactly what I want to see every time I take a trade. I want to be just moving off of my decision making level with my entry confirmation coming in. Ideally, this would have happened over here, which it did. It did happen over here. I wasn't on the chart. But like, this is my ideal entry confirmation right here. When we are breaking my decision making level, and it wasn't like the first break. Like, we've already corrected, and we've broken, and then we got entry, like, confirmation from my lagging line volume. Like, so that's the ideal trade for me. And so, even with it being where it is right now, is totally fine, because we haven't moved too far off away from this decision making level. I mean, we're only about 100 pips away from that decision making level. And that's not much. I know it sounds like a lot, but that's not much. And we have all of this ground to cover. So, over 450 pips of room between decision making levels, right? And so, is there a chance that price covers all 450 pips? Yeah, absolutely. It's definitely gonna. I could say that's something that happens over time, but it's not something that has a great possibility or probability of happening in today's session. You know what I'm saying? So that's why I'm thinking about that as well. And so the 2-to-1 is fine for me. I'm also paying attention to this psychological level at 145 flats. I'm paying attention to that level. So I would like to see, as we move to that level, right? I would look at my MACD and see what it's doing, mainly on my 15, and seeing what my volume was saying on my 15 MACD when I'm looking for an exit, not from my entry, right? When I'm looking for my exit, because if it shows that we're getting, like, when we start moving to this 145 level, if we get there, if we start to show any type of correction, I probably will take that exit, because the 145, it's been a previous level that the market has visited and even talked about over the past. Like, we've seen it. We've seen it come down here at this level in price, right? And just bear with me through all my entry positions, but this is 145. Over here is 145, right? And so we can keep going back and seeing the times that price kind of got stagnant at 145, right? And so I would be analyzing price as it moved there, as it moved to that 145 level to see what it was going to do. Um, it may be even a scenario where we get to this 145, we start moving a little stagnant, and then we end up getting a confirmation to trade back down to this decision making level, right? Because remember, I said this is 450 pips of room between here, 450 pip radius the market gets to move in, and so we've already the more pips it moves up, the more pips it has room to move down, right? And then, we get into some things that I'm sure Q will talk about in coming sessions, imbalance in price. Like we start getting to all the little, not little, but the signals and the indications the market is giving us for what it could potentially do, because that's what it is about. We don't know what it's going to do. Like I took this trade because for the potential that it could travel to this level. You know what I'm saying? Um, and I'm okay with my risk here. Like I I I don't really have a particular um maximum on my risk, especially on my Forex account. I have one on my live funded account for when I'm trading gold futures, and because it's just a little bit different. Like I don't it's just different. I don't need to get into it too deep, but so like 55 pips, at the lot size that I trade, that's about five. Let's see, it's probably like $5. Let's see how much I'm risking right now. Yeah, it's about $6, right? So it is it's a pretty good size of my $105 account, right? Um, but that's just my current risk continuum on my when it comes to Forex. Like as Q was talking about that, I'm comfortable risking that. I'm comfortable risking $11, right? And so the more comfortable I get in risking, and this just comes with time. I'm not saying this is something you have to do, but the more comfortable I get on my risk continuum, um, I don't really see a dollar amount that I wouldn't risk, because I can analyze the risk to reward and see if it's worth it. You know what I'm saying? This doesn't mean I'm just gonna risk 100% of my account every trade, because I know that's not smart at all. Um, but there are times where I'll risk a little bit more because I see the upside is a little bit greater, right? And that's how there so many weeks I come out of a trading week, at like a 20% win ratio, but I'll break even. And it's like, how does that even happen? And it's because I allow myself to slide on that risk continuum and have a little more comfort on it at this point. Um, but USDJPY sitting between these decision making levels, right? We'll see. We'll see what price it does. To be honest, historically, I've seen price not do this from now until like 9 a.m. and then price starts moving again. So like I don't really expect anything to happen for now and at least an hour or so. Um, so let's go take a look at gold. See if gold's not giving me anything yet. It broke that decision making level that we were waiting for, but no entry yet. Even when we did get that break, no entry yet because we didn't get. And why does it still say replay? It's kind of bothering me. There we go. Because we didn't get our lagging line. Oh, it said replay because I replayed it. Duh. Go back. On this break right here, decision making level, we didn't get our lagging line, this white line below price, right? So this was below the low of price, but it was not below the lagging line was not below price. This candlestick was below this most recent low of price, But this was the confirmation that I'd be waiting for that entry, and we have not gotten that yet on gold. So gold's still teeter tottering, and like this is the beautiful thing about this. Just I mean, there's so many things of why this is beautiful, right? Because you understand the fundamentals, you understand when you're trading against them. You understand the sentiment. You understand when you're trading against it. You understand decision making levels. You understand when you're in areas that you shouldn't trade, or you understand in directions that you could trade, right? And so, even if gold does not head down and give me my sell, which, if we think about this news photo that came out, I think Q said it was, yeah, so that was and I would say that's significantly greater than the forecast. I'm not sure what the market said. Let's actually go to my FX book for that because my FX book changes. So let's see. The market said a better than expected result, right? And so that is going to even send us more in a risk on state here. You see that? Look at that. It just went from 69. That was the last time we refreshed it. And this was prior to that consumer confidence folder coming out. And now we're at 76. Why? Because when consumers are confident, that's a good thing for the markets, and that's a good thing for the market for the US dollar. And that's we're getting a positive response from the market for that. So I'm really glad we got to see that example. Because that was a direct reflection of this right here, that consumer confidence folder. Okay, so understanding that, like, my long-term sentiment projection of gold is bullish because of there's just still so much that lies in the air for agreement, we will say. And so it's bullish on gold, right? And so, however, that photo that came out today, combined with how the market was already approaching today, combined with that news, that wouldn't support a bullish gold. That wouldn't support a bullish gold, right? So if price were to break, and give me my entry, it'd be somewhere around here. um, I would be trading against the fundamentals, right? Or not against the fundamentals, against the current sentiment, right? I'd be trading against that. But that doesn't like scare me. Like, as long as I'm aware of it. Now, would I would delegate that trade as having more risk, right? Because I want to be flowing with the market. Like, I don't want to be trading against the grain in any facet with the market. I don't want to be trading against the fundamentals, and I don't want to be trading against the sentiment, right? Like, I have my own sentiment, but whatever the current sentiment is in the market, that's essentially moving the market in this moment. So, like, if I'm going against that, then I'm essentially like waiting. I'm going for a reversal. Like, I'm waiting for a reversal. You know what I'm saying? Like, if the market's trending bullish, and so let's take USDJPY for example. USDJP. Let's take gold actually. And so, since gold is a risk off asset, if the market was if the market was trending, okay, so if gold is a risk off asset and the market was trending down, okay, but our our sentiment, I'll think of how I want to say that. I'm trying to give you a good example, but anyways, yeah. I would be trading against the sentiment. I want to be flowing with all of it. I want to be flowing with all of it. And they are not all the time is everything lining up together. So that's why we also have to be patient and do our homework, and figure out where we're at. But that's what I would be waiting for there. And I mean, under 10 pips, I said that on the call this morning. Anything under 10 pips or 10 points that I'm risking, like, I'm taking it level to level. I'm moving level to level. If it's over 10 points and I'm risking it, then I'm going for a 2-to-1. And I got something stuck in my beard. Tickling me. Um, Over 10 pips, I'm going for the 2 to 1. But then, like I said before, I'm going to try out that new contract strategy, which allows me to leave one in for my 2 to 1 and then let a runner run. So I'm waiting for either one on gold to happen. Based on where we're at today, I mean it's tricky, right? So I don't think we're gonna keep going down today, just because like the fundamentals have more weight than like a moment to moment sentiment, of course. So I'm always going to make sure I'm aligning my analysis, not aligning my analysis, but my entries and my execution as closely as I can with that overarching fundamental aspect of it. But since we got this large, very large move down here, like even though we've got some stuff to not really support, the risk off state safe haven demand, like I don't think sellers have enough pressure to push gold down more. I could be wrong. Um but I probably if I take a trade on gold, it's going to be in the bullish direction. I don't think I'd be comfortable taking sells just because we've tanked so far on gold, and there's really no supporting reason to, right? You know what I'm saying? Like when we look at the fundamentals, like the tariffs a big one still. The Ukraine and Russia. There's some stuff going on in the Middle East again. Um, and so those three things, right? Like I just don't see any solution yet, so I don't see why gold would continue to fall out the sky. Now, it did fall out of the sky, but for it to continue to do so, I mean, as it has done since Friday, May 23rd, right? And so who knows? Maybe it continues going down, but I just don't like it going down. So I'll probably be really patient in my execution there.
Yeah, and I, if you don't mind me building on that,
Yeah,
and you got to it there at the end, but just further sliding us to the not as risky side of things, taking control of our risk, particularly on gold. And I'll push send on this comment I was typing. I'm very cautious with gold shorts, so expecting gold to go down when global tensions have news breaks. Recently, I believe overnight yesterday, there's some news coming out of Russia, Ukraine. There's news coming out of Israel, Palestine. Obviously, that's a continuing issue. And then India, Pakistan as well. And
mm,
whenever stuff like news articles come out, that those news articles, those geopolitical, geotension articles, heavily skew the the trader sentiment on the what am I trying to say here? What am I trying to say here? Just risk. Excuse me. Gold is a safe haven asset, and that's what we want to make clear here. And because it's a safe haven asset, traders, investors, funds will pour money into gold whenever tensions get high, and things are unstable. Just to put it as simply as I can. So when crazy stuff happens in Russia, Ukraine, Israel, Palestine, India, Pakistan, we should expect gold to move upwards. Um, but again, we're all that does is help slide us down on the not as risky part of the spectrum. We still have our edge. We still have the hard data that we're looking at. But that news, particularly when it comes to gold, the war news, anything speaking to rising geopolitical tensions, we'll like to see gold move upwards.
yes. And something I wanna add on to that. You said that you said something that was really, really important. Uh, come back to me. Um, oh, um, and combining with everything you just said, what allows us to even continue adding to that risk continuum and less riskier trading conditions is the market sessions. is understanding which market session we are in, how deep are we into a particular market session, because we can't the price can't move without the money to move it, right? And so that happens in particular markets, which is why we wake up at this time and trade at this time, because this is normally a time where we get that movement. um and so yeah, I just wanted to touch on that.
Yeah, and to build it to the charts, and so for me, looking at gold, it's not a situation where okay, I think because what happened overnight and what happened over the last couple of days, again looking back towards the last couple of days is particularly important today because we're coming off of a banking holiday and we're fresh off the weekend. Like not much trade has happened, so we should expect to see the market react to everything. Marcus talked about this earlier in the call. But as today progresses, we move into tomorrow as well. We'll see how gold, the U.S. dollar, will react to everything that's happened over the holiday and the weekend. But so even now, right? I'm not putting in a buy right here, right now, or as soon as I woke up and saw those articles, unless you know, of course, that's one part of it. But I need my edge to be present on the bullish side if I'm going to take a buy, and my edge still has to be there. And then I'm analyzing the hard data as well. If hard data releases, and in the sake of me trading gold, we see something that is super bullish for the U.S. dollar for some reason. Anything that super U.S. dollar moves up, we should see gold have a attraction towards the downside. I'm going to wait for things to line up for me, and then my conviction is going to be very high in the trade that I put, and in me reaching the profit target that I put on that trade.
Yeah, that conviction can only come from understanding just what you're looking at, what you're analyzing. I love it. I love it. In about 7 minutes left on this call here. Let's check our baby pips. See what our baby pips is saying. See how baby pips isn't budging. It's risk on is shifting more and more to that. Another thing that we can look at for our risk and understanding, because as Q's talking about the risk continuum, when we're talking about risk on, risk off, we're understanding the risk continuum of the market, right? So like in the same aspects. Um, let's check this VIX. Go down to the. I don't like the way that looks. So we started the day. Mm. Yeah, and so all I'm paying attention to with this VIX, really, we can check the daily, um, but we're just looking to see the change from day to day. The higher we are on this, the more we shift to risk off, the more risk off is on the horizon. The lower we are on this, the more we are looking to shift to risk on, and volatility into risk on assets increases. And so all of these times of where you see these major spikes are all like really important times of the year. Like this one right here, December 18th, that was a interest rate announcement, I'm pretty sure. Um, so just that's just for the context there. But we go into today, like we see this was the close on Friday, right? This is where we closed on Friday. and then we opened down here on Sunday. That's not supposed to happen. It's not supposed to do that, but it just shows what the market was, how the market was feeling when the market was closed. So we're down, about 2 points roughly from Friday, which I'm showing this to support the risk on that we're seeing from baby pips, and that's just a way that you can view it as well on the chart by using this VIX. And all I care about is what is the change from yesterday to today, and are we going up or down? If we're going up, that's going to tell me that we may shift to risk on sooner than later. If we're going down, that means we may shift to risk, or excuse me, if we're going up, we may shift to risk off sooner or later. If we're going down, we may shift to risk on sooner or later. Just want to touch on that as well. Excuse me. And then one thing about trading and about our understanding and all the things that Q and I have touched on today, the only thing that can happen by the only thing that we can do is acquire this information. Like, the information is readily available for us to acquire, to figure out what it means, and to figure out why it matters and how we use it. And one thing that I always love to touch on with trading is just the infinite process of that. Like, just because I've analyzed an article today to understand how it could impact this week, right? Next month, what happened, the article I analyzed today, it could still have somewhat of an impact on it, but like there's going to be new data that comes out, new news articles, new headlines, new this, new that. Like, the market is constantly shaping itself, right? So I constantly have to be forming with it, right? Forming my own sentiment with it as it shapes itself. And so I say that to say this is something that we like, paying attention to everything, not everything, because if it ever seems like a lot, I don't think me and Q look at nearly as much as there is available. I just think we've been able to lean out and slim down the information we feel is important and impactful. There is probably other information out there that is important or impactful. Like, I can say that, right? But what we have, we feel like we've got enough, right, to paint as much as the picture as there is a picture to paint. And so um what we've given you, I mean, today is enough, but there are other ways that you can extend on that. But I say that because I wanted to show this article here that came out 2 hours ago that I didn't read. Um, but U.S. dollar rises early Tuesday after holiday, which this all makes sense. Focus the focus for the market is on the confidence, which just came out, the FOMC minutes, GDP, and personal income this week, right? So what are they saying with all of that? They're saying consumer confidence, which we've already gotten that result for. Okay. And remember, they were saying this is the market responding to the holiday weekend at the beginning of it. The dollar responded to the holiday weekend, or reacted to the holiday weekend by rising, right? But now the focus is on consumer confidence, which we already got that release, and we see consumers are confident. Okay. FOMC meeting minutes was the other one that said the market's focusing on. GDP which this is preliminary GDP, so I'm not really I think when it's quarter to quarter, it's all preliminary, and then we get our year over year, and that's not preliminary GDP. That's just my guess, but let's click and see what it says. It says while this quarter to quarter data is reported in an annualized format, quarterly change over the last 4 years or 4 quarters. The previous listed in the actual from the advanced released, and therefore the history data will appear unconnected. There are three versions. Okay, this is the portion we care about the most. There are three versions of GDP released a month apart. Advanced, preliminary, and final. Okay, so this is the preliminary GDP because the one that comes after this is the final GDP. Advanced is the earliest release and thus tends to have the most impact. Interesting. So it's saying that okay, I need to analyze that because I don't that logic doesn't logic for me. Um, but yeah, all we need to know is this is another thing the market is focused on. Gross domestic product essentially is just the lifeline of the market. It tells us how well the economy is doing or how poor the economy is doing. So we want our GDP going up. That's what we want. We want our GDP going up. So the market is currently pricing in a point 0.3, same as the previous. So anything above this, I understand that this is saying it. This GDP folder has the most impact. But anything above the point 0.3, I'm going to look at that to impact the market in a bullish way, right? So anything below a point 0.3, negative point 0.3, I'm going to look for that to impact the market in a bearish way. And then the final thing that the market is looking at is personal income. And so that's this here, PCE, personal consumption expenditures, which is just personal income, right? Separate from this folder. Separate from this folder. This is not what I believe it's talking about. PCE. Why traders care? It's the Federal Reserve's primary inflation measure. Primary inflation measure. Inflation is important to currency valuation because rising prices lead the central bank to raise interest rates out of respect for their inflation containment mandate, which is their inflation containment mandate is price stability. Price stability. And so, I mean, this is going to kick off our week tomorrow. We kind of got it already kicked off with this consumer confidence, but this is for sure going to kick off our week tomorrow because it'll allow us to increase our awareness to like the folders that comes after it and how it pertained to whatever they said in this meeting minutes in this. Um, yeah, this is gonna be fun. A lot of stuff, a lot of good stuff coming up this week. Um, so yeah, 7:33. Didn't realize it was over 3 minutes. I need to get ready for work. Currently in this trade, gold. Yeah, I'm not liking gold right now. Probably will find myself on the sidelines until Tokyo session for gold. But don't hold me to that because my sentiment may change. All right. All right. Very cautious with gold shorts when global tensions have news breaks. There have been, yeah. You're so right. And the thing is about those two, we never know when it's gonna break. Like there could be any moment we could see something on like social media or a news released about an attack or something, and then boom, like moments after, like I feel like gold ends up revealing that.
Mhm.
But
Mhm. Yeah.
but I'm going ahead and bounce out of here, get ready for work. Um, great call this morning. You got anything, Q?
No, good call. Went over a lot of good stuff. Like I said, I always recommend if you don't, people watching this live or recording, um, pay attention to the verbiage, the what I call the esoteric nomenclature. Put it into Chat GPT and gain an understanding of the verbiage as well. as well as everything we're talking about as well. But if things sound a little bit confusing, always feel free to shoot us a message, and we'll tell you our perspective on it, how we interpret it and understand it. But ChatGPT will be a fantastic resource to plug in anything that you heard today and didn't quite understand, and then tie that into the broader concepts that we're talking about. Yeah, good call today. Back at it Thursday night. Love it.
Thursday nights and Sunday night for the members in our community. But other than that, for those of you that get to this recording on our YouTube channel, we appreciate you and we look forward to seeing you in the community soon. Other than that, catch you later, Q, and keep blooming.
Yes, sir. Just like that.